Greeting for the day. Welcome to GrowthPad e-learning course on batch payment processing and hold accounts payable. Let's start learning. At the end of this module, you will be able to understand the below. What is payment processing? Batch payment run process flow. What is batch payment processing? Batch processing in airlines billing, including refunds in batch processing. Invoice payment hold. System holds. Payment processing, requirement, and applicability. How credit card transaction payments are processed. Batch payment processing, steps. Batch payment run, criteria. T&D claim processing. Batch payment processing, types of disbursements. Payment processing, disbursements risk, and issues. Payment processing, disbursements controls. Do's and don'ts, batch payment processing. Payment run. It is the process executed to generate payments, check, wire etc., corresponding to the unpaid or outstanding invoices which fall due, as per terms. All unpaid or outstanding invoices are referred as open invoices. Once all approved and not on hold invoices are paid automatically by the system post-execution of payment run process. Payment instrument could be check, wire, EFT etc. A voucher could be supplier invoices, check requests, employee expenses, employee salaries. Batch payment run process flow. Let's see how a payment process works. After invoice is processed, he get ready for payment through ERP. In the payment date, payment team validated the payments, once schedule and initiate with you before payment. Before the payment is expedited, on new due date of payment, invoice need to be reviewed for accurate cost at some case duplicate, and check is also done, if invoice has the errors. It is sent back to the invoice processing team for rectification. If invoice has no errors, the confirmation sent to the payment team. Simultaneously, payments team has to inform Treasury, for the total value of the invoice, in local currency to Treasury team, to get a confirmation that bank has enough cash, to make payments. Once the invoice is all set, and free from any errors, Treasury, confirm that we have enough funds at bank, the invoice became free for payment, and now it's sent to the ERP. The notification for the approval it should be given by the payment controller. Now the familiar upon the recipient of the payment, the flow on moves. If payment is made to other department with the company, we called it a company payment. Once the payment received by the internal department, in the company, payment is complete. If payment is made anyone else, outside the organization, we expedited the payment for our bank, and we refereed as merchant bank. The bank, vendor or supplier, is also known as a receipt bank, and the back issued as final payment, and financial number or cash to the supplier. In this flow, there are two items are involved. First is the technology, which is also known as payment gateway and processor. You must have seen gateway popping up when you make any online payment through debit and credit card. Second is the transaction fee or cost, which is the cost of instating and completing the online payment as an involved moment currently and digitally from one bank to another, to moves the numbers and involved data through digital server, hence we have this cost. Once payment is issued, the vendor, supplier received the payment for goods and services shipped and delivered to the purchaser. This process is also known as settlement or payment acceptance. After the payment is received, the cycle of payment is complete. Please note the moment of currency or payment from one bank to other bank. We have 3 PS involved in payment cycle. One player is highlighted as merchant bank. Second player is payment highlighted as authorization and settlement, payment acceptance. Finally, we have the pricing interchange, transaction fee for the change process. Batch payment processing is the practice of processing many authorized transactions at the same time. A merchant may do one batch processing a day, where all of the authorization codes from the credit cards used by its customers are sent to each of the customers' respective banks for approval. Once approved, the funds are sent to the merchant's bank for payment, which is called settlement. Every merchant must choose how to go about processing credit card transactions. This may seem like a simple decision, but the method merchants use to process credit card payments can have many implications for the day-to-day operations of the business. The two main types of credit card transaction processing are real-time processing and batch payment processing. If you're unsure which payment processing option is right for your business, first make sure you understand how credit card transactions are processed. They have different fees and provide the merchant with different capabilities. In this article, we're going to focus on batch payments and how to process payment clusters. Increase revenue by accessing multiple sources of flight information to ensure all eligible flight movements are invoiced appropriately altogether. Shorten the time from invoicing to payment receipt by reducing contested invoices through accurate and evidence-based invoicing. Reduce the internal costs of billing activities through the automation and streamlining of processes. Further increases revenue through the provision of flexible online billing to prepay or resolve overdue payments. Flight movements, landing and en route air navigation charges. Airport passenger service charges, APSC. Passenger safety charges, PSC. Cargo safety charges, CSC. Various airport service charges. Various ground handling charges. Holds are placed on invoices to prevent payment of invoices. Holds can be placed on an invoice, either automatically by the system, during the online approval process in the Accounts Payable module, or manually entered into the system. Oracle Payables provides some generic invoice holds, and the RF has defined some specific holds that apply to our business, that is hold pending project director approval. Also, payments to a supplier can be prevented by placing a hold on the supplier site for a supplier, rather than the individual invoice. Manual holds. There are three types of manual holds that can be used to prevent payment of an invoice. Invoice hold, manually applied in the invoice hold window. Scheduled payment hold, manually applied in the schedule of payment window. Supplier hold, three types of holds can be placed on a supplier site record for a supplier. Hold all payments. Hold future invoices. Or hold unmatched invoices. Also, an invoice amount limit can be placed on a supplier site record for a supplier. System holds. Certain holds are automatically applied to exception invoices during the online approval process. These holds cannot be manually applied. Some holds can manually be released, and others cannot. When a hold cannot be manually released, resolution of the issue that caused the hold must take place before the system will release the hold. Some of the holds that the system automatically applies are: can't funds check, invoice project, task, award, PTA, does not equal the purchase order, PTA must resolve the issue, manual release is not allowed. Amount, invoice amount exceeds, invoice amount limit specified for a supplier site record for the supplier, manual release is allowed. Invalid PO, invoice matched to an unapproved or invalid purchase order, manual release is allowed. Supplier, hold future invoices has been designated in the supplier site window for this supplier. Manual release is allowed. Matched required, invoice not matched to purchase order. Manual release is allowed. Max quantity ordered, quantity billed exceeds the total quantity ordered, plus tolerance amount. Manual release is allowed. Max quantity received, quantity billed exceeds the total quantity received, plus tolerance amount, only applicable if three-way match is required. Manual release is allowed. PO not approved, matched purchase order not approved. Manual release is allowed. Price, invoice unit price exceeds the total purchase order unit price, into 1+% tolerance. Manual release is allowed. Quantity ordered, quantity billed exceeds the total quantity ordered, into 1+% tolerance. Manual release is allowed. Distribution variance, invoice amount does not equal sum of invoice distribution amounts. Manual hold not allowed. Must adjust invoice distributions, or invoice amount and resubmit approval. All payments, hold all payments has been designated in the supplier file, site record for this specific supplier. To initiate payment there are mandate requirements. Below are some of the criteria for selecting invoices or vouchers for payment run. Vendor or employee should be active, and not be blocked in vendor master database. Invoice or voucher should be processed, and posted in ERP by processing team. Invoice or voucher should be reviewed, and approved by responsible approver or party. Invoice or voucher should not have any hold or AP exceptions. Invoice or voucher should be due, as per agreed payment terms. Paying currency should be tradable, and valid as per agreed terms and contract. In order to understand batch payments, you first need to understand how credit card payments are processed. Though the steps may differ, depending on the payment processing option used, you can more easily understand the process by breaking it into 3 steps: authorization, processing, and settlement. Click each step to know more. Authorization. Authorization is the first step of the credit card payment process. If you're using batch payment processing, the customer will pay with their credit card, in exchange for the merchant services. The POS will then send a message to the credit card issuer, MasterCard, Visa, etc., with the credit card information and transaction amount. The POS essentially asks if the issuer thinks the card is stolen, if the card is legitimate, and if there's enough money for this transaction. As long as the card doesn't appear to be stolen, and holds enough money for the transaction to go through, and the card hasn't been maxed out, the card will then have a hold placed for the transaction amount. At this stage, the transaction has not gone through, but the money has already been spoken for. Processing. The next step is credit card processing. At this time, the authorization hold is processed, in order to move the customer's money into the merchant account. Settlement. Settlement has occurred when the payment processor has the bank transfer the money from one account to another. Once the money reaches the merchant's account, the transaction is settled. This is also known as closing the transaction. Batch payment processing. Steps are follow. Invoice validation. Download invoices approved and unpaid. Run duplicate potential check report. Prepare payment proposal file. Supervisor manager review. Client or stakeholders approval. Execution of payment run. Checks printing and mailing. The validation team pulls invoices from validation queue, and reviews the invoice details entered in the ERP. Details like INV hash, PO hash, vendor details, site address, tax details, etc., are checked. Downloads from system all invoices, which are approved but unpaid. Run duplicate check report, macro, to ensure that there are no duplicate invoices processed. The processor runs a macro or automated solution, whereby the system prompts pop up to indicate if the invoice being entered on the system matches, like invoice number, PO number, amount, site address, vendor name, or any combination thereof, has a potential match with any invoice paid out in the previous periods. Prepare payment proposal file for good to pay invoice. Payment proposal file reviewed by supervisor, to identify any potential duplicates. Then payment run report sent to client, for final approval. Post-client approval payment team, executes payment processing as per designated payment schedules. Checks are printed, and sent from client side, as per the payment run report. Below are some of the criteria for selecting voucher for payment run. Vouchers should be approved and posted. It should not be on hold. It should be due as per terms. Vendor or employee master should not be blocked. Credit notes amount should not exceed voucher amount. Currency should be tradable, and not blocked for payments. Travel and expense reports. A company reimburses their employees for travel and entertainment expenses incurred on official business use. Incurred under travel and entertainment policies of a company. T&D reports need to be submitted timely, along with original receipts and supporting documents. These expenses relate to employees of the company, and thus in ERP the name of employees is shown as a vendor for making payment. The employee must fill a reimbursement form and attach all the documentation bills, vouchers related to the expenses incurred. The expenses must be approved by the superior, or a designated approver. Post-execution of payment run, there are different disbursement types available, as per vendors' or suppliers' requirements. Paper check. Electronic payment, wire and ACH. CHAPS, clearinghouse automated payment systems. BAPS, bank automation payment systems. Paper check. Traditional bank checks are an integral part of the modern economy. Today these are still one of the primary mediums by which individuals and organizations transfer money and pay bills. Types of checks. Continuous formatted checks. These are typically pre-printed checks with the appropriate bank account information, along with vendor name and remittance address. Laser checks. These are printed on laser printers, identical to the ones used on most personal computers. Checks are printed on a blank paper that has certain security features embedded in it. Benefits of laser checks. Security is a major benefit of laser checks, since no bank or company information is pre-encoded on the blank check stock as it is on pre-printed checks. Some of the other benefits are: cost of check forms are reduced. Changes on details do not incur much costs. Reduce labor costs. Bank reconciliation becomes more accurate, as MICR encoding helps generating check information. Helps in placing tight controls. Check run frequency. As a best practice, the check run frequency should be weekly. However, large organizations process checks daily. Check signatures. Check signatures are generally members of Treasury and/or accounting departments at executive level. Separation of duties is one of the best controls in check processing. Other controls includes: checks should not be returned to the check requester, but mailed directly to the recipient. Check signatory should not authorize payment. Check signatory should not be responsible for maintaining the facsimile signature plates. Authorizer of payment should not be responsible for reconciliation of bank statements. Best practices in check handling. Below are some areas of best practices in check handling. Eliminate the multi-part check. Filing systems. Check runs. Travel and expenses checks. Procurement cards. Check stop payment and reissuance. Post-execution of payment printed check will be mailed to supplier, vendor to his remittance address available in vendor master database. There two scenarios may occur in payments cycle. If vendor raise concern that they have not received check, which shows already mailed in ERP. If check is not deposited, company need to stop payment and reissue check to supplier considering check has been lost or damaged in the mail. If check is deposited, company should inform supplier that check has been mailed and shows deposited in ERP, so they will assist vendor with endorsement details, front and back, as proof of payment. Most of companies have standard 30 days of remittance policy, henceforth supplier should wait at least 30 days from check issuance date. Electronic payments. These are electronic payment, made making use of ERP and internet technology. Most of the companies now these days prefer this payment mode to pay their suppliers, to ensure paying on timely manner as per agreed terms. Also helps to pay on time, and avoid late fees, penalties etc. Advantages of electronic payment. Prevention of check fraud. Redemption of costs, postage, paper and bank processing fees. Timing issues, reduced loss or damage of checks. Wire payment, intro. This mode of payment was traditionally used for large sums of money from one company to another. These are expensive way to transfer funds. Wire instructions are accepted over the phone, and these instructions would include: name of bank, where the accounts were housed. Bank's transit and routing number. Customer's name. Name and phone number, to be called when the money arrives, optional. Wire payments, controls. Below are some of the controls in wire payments. Banks enabled companies to set up recurring transfer with a code. An employee would refer that code, provide the payment amount, and initiate transfer. With the use of internet technology, wire transfer could be initiated online, Usually two authorized employees enter their appropriate passwords to initiate a wire payment. Non-recurring transfers can be executed online, with appropriate approvals and passwords. Wire payments, risk. Below are some of the disadvantages of wire payments. Instructions have to be given over phone, which carries risk. Costly method compared to ACH. ACH, Automated Clearing House. ACH is also part of electronic payment mode. It is an electronic network for financial transactions, generally used in domestic low-value payment industries. An ACH is computer-based clearinghouse and settlement facility established to process the exchange of electronic transactions between participating financial suppliers. There are types of payment under the ACH process. Direct payment, where money is electronically transferred from one bank to another bank. Direct deposit, where money is electronically deposited or credited to an individual account. CHAPS, Clearinghouse Automated Payment System. CHAPS is an electronic, bank-to-bank payment system that guarantees same business day payment, providing the funds are released before 3 p.m. CHAPS, advantages. Fast, reliable and secure method of guaranteeing same business day payment of cleared funds in the UK. Payment is made from one account to another on the same business day. Funds are cleared on day of receipt. Built-in security. Nationwide service. Payments are unconditional, and once made, cannot be recalled. Payments can be made for any amount, so there's no need to worry about check guarantee limits. Easy to arrange. Money is received on the same business day, and can therefore be drawn against immediately. Types of CHAPS. Single immediate payments. Forward-dated payments. Standing orders. Payment processing, disbursements risk, and issues. Click each issue to know more. Disbursement issues. Errors in AP must be fixed using valuable time that could be devoted to more value-added tasks. Mistakes made in AP can cost a company. Below are some of the common types of issues in AP. Duplicate payments. Duplicate payments like original invoice and a fax copy, invoice and statement, invoice and notice letter, paper invoice and electronic invoice, invoice and P-card statement, might get paid together. Henceforth duplicate potential check report must be done prior executing the CHAPS. Paying the wrong vendor. A vendor with similar name or similar vendor number may get paid. Vendor master team should ensure that no duplicate vendors will be added in supplier database. Disbursement controls. Below are some of the controls in disbursements. Eliminate or minimize manual input wherever possible. Provide adequate training and cross-training. Benchmark and identify the areas of operations where the most errors occur. Try to import data electronically, if feasible. Establish tight policies and procedures and adhere to them. Eliminate vendors with whom you no longer trade. Complete all name, bank and address changes on timely basis. Standardize the vendor naming procedure. For example, WNS versus W.N.S. Use a consistent numbering system. Don't use hyphens, dashes, or other punctuations. Do's. Do check for any important payment before the payment run. Do check for accuracy. Do cross-check the payment method. Don'ts. Do not process any payment for blocked account. Do not process any payment where the vendor or employee master is blocked. Value credit memo, CM, should not be more than the voucher value. Never process any payment to the blacklisted country and with non-tradable currency.